Hi, everyone. I'm Gary Brode from Deep Knowledge Investing. We work with hedge funds, family offices, registered investment advisors, and individuals like you to help you get better returns in the stock market. I'm here with a large cast today. We have our host, Robb Fahrion. He's the CEO and founder of Flying V, our digital marketing partner. Star intern Alex Petro, who is at the University of Exeter, did phenomenal work on this week's 5 things and pretty much every week's 5 things. And he's been a long-term Bitcoin holder. We'll get his view on that. And we have Tony Nash from Complete Intelligence. The firm was started as Partial Intelligence, but was upgraded a year ago to Complete Intelligence. Tony, congratulations on the
Thank you very
promotion.
much, Gary.
Good to see. Rob, how are you doing this week?
I'm doing great, Gary. Happy to be here. Tony, welcome to the show.
Thank
Glad
you
to
very much.
have you on, and Alex, as always. But yeah, we've got a great edition of this week's 5 things. We're calling it the Bitcoin to 100,000 issue. Obviously, hit that milestone over the last week. We can all raise our hands and celebrate. And if you can guess who we might be talking about, you've probably listened to some of these shows in the past. But first thing, Gary, we're going to get to Tony right out of the gate. Tony's predicting a stronger dollar. He's going to tell us all about that. Thing number one of this week's show, Gary, Tony Nash on dollar resilience and central bank policies. Gary, take it away.
All right. Thanks, Rob. Tony, so glad you were able to join us this week. So one of the things that has been a key part of deep knowledge investing and the 5 things, we talk about it all the time, is the debasement of the dollar. And when we talk about that, we are talking about the loss of purchasing power of the dollar. However much money, however many dollars you have in your checking account, if you want to go buy food, fuel, entertainment, whatever you're buying, you're going to get less for your money. Now, you are correctly pointing out that's one way to view the dollar. The other way is relative to other currencies. And in that sense, the dollar's been really strong. You've got views on what you think is going to happen to the dollar against some big currencies over the next few months or the next few years. What's the time frame you're looking at here, and what do you see happening?
Well, really, it's this piece was really written about the next few months, and part of the reason I wrote it was because we had people out there saying the dollar is going to rip to 110 or 115 on the Dixie, something like that, and we don't necessarily subscribe to that. So, just really quickly, Complete Intelligence is an AI-driven platform. We forecast 1,800 items every week, brand new forecasts every Monday morning. And so what we're looking for in the dollar over the next quarter, I would say, is moderate appreciation, really within a band, right? And so when we look at the dollar, I think a lot of the run up, we've gone from 100 to about 106 on the Dixie over the last 2 months. So we've seen really dramatic appreciation in the US dollar. And so you have to compare that when we compare it to places like Europe, with the euro, or Japan. Japan has a central bank that really has, over the last couple of years, kind of talked out of both sides of its mouth. At times, it's rapid depreciation of the currency. At times, they want to strengthen it, and you've seen these hugely volatile moves in the JPY. So when we look at the Japanese yen, there were statements out today by the BOJ saying that they want to have better communication, and that may lead to appreciation in the yen, which won't happen. Okay, why won't it happen? Well, partly because China is trying to devalue the Chinese yuan, and Japan has to be competitive with China on an export basis. So Japan is not going to appreciate their currency. Compared to the dollar, both of these are compared to the dollar. Why? Because the US is the biggest export market. Okay, so Japan has, and China as well, they have central banks that are not really very good at communicating with public markets. So you can't really take their statements as entirely credible. It takes intervention, in Japan's case, from the finance ministry, typically to intervene in markets to make their message well known. Okay, if we look on the other side of the world, in Europe, we have a Europe where German industrial capacity is collapsing. We have a French government that just collapsed. We have a UK government that doesn't have a lot of credibility. And so Europe generally has massive problems. And the ECB came out and said they're going to cut rates by 25 basis points at their next meeting. So you don't have a lot of strength in the Eurozone. And I know I mentioned the UK. I know it's not in the Eurozone, but it is relevant to the EU. You don't have a lot of strength in the Eurozone politically, economically, and that's problematic. So again, going back to this piece, there was this Trump trade, or is this Trump trade that's been on, where people really bet on appreciation of the dollar based upon Doge, the Department of Government Efficiency, and other things, strengthening the dollar, cutting down US spending. I think a lot of that's gotten ahead of itself. It's going to be harder than many people think, I believe, for Doge to make an impact. And that's what our models are telling us as well. So the strength of the dollar, there's been a lot of enthusiasm there, but we don't necessarily see it going up to, say, 110 or 115. We also don't see it going down to, say, 95 or 90 in the next 3, 6, 9, 12 months. We think it's in a pretty solid zone of, say, 103 to 109, something like that.
All right. So for the people who are new to this, what Tony's talking about, where he's talking about going down to 103 or 95 or at 106, could go up to 110. And he's referred to that as Dixie. What that is the US dollar index. The ticker is DXY, which is why people call it Dixie. And what it is it is a measure of the US dollar versus other large currencies. So against things like the euro or the British pound or the Japanese yen. And so when Tony's giving those numbers or talking about Dixie, that's what he's referring to. A higher number would mean a stronger dollar. And again, it's important to clarify that that's a stronger dollar versus other fiat currencies, the kinds of currencies that we're talking about here. It does not mean that your grocery bill is going to go down. We could have a strong dollar against the yen or against the euro and weakening in terms of your purchasing power. Now, Tony, the question I want to ask you, because we've been talking about the Bank of Japan here for over 2 years. Deep Knowledge Investing started talking about the issues with the carry trade and the Japanese currency back in October of 22. That's when we first started on that. And you're right. The Bank of Japan at times have spoken out of both sides of their mouth. We've also criticized them for being too clear in situations where a little ambiguity would have kept their currency a bit stronger. But you're forecasting the dollar to strengthen against the yen over the next few months. Now, my question for you is, given how weak the yen has been over the last 2 years, there's always the possibility, and with inflation starting to spike there, that the Bank of Japan, they've talked about raising rates. They sort of did earlier this year. They did a little bit. They've raised the reference rate. What happens to your forecast if the Bank of Japan raises by something small, like 20 basis points, which for them would be a small move, and they'd still be way below where the ECB is, the European Central Bank, the Bank of England, the US Federal Reserve, way above them, way below Canada. What happens if the Bank of Japan makes a move?
Not a lot, to be honest. I think a lot of those expectations of a small move by BOJ are a little bit assumed. Japan cannot strengthen much for productivity, international competition, demographic, and other reasons. They are painted into a corner. And all of this started in 2012. The Japanese yen in 2012 was trading about 76 to the dollar. And now it's trading at like 154. So people talk about dollar debasement. Imagine living in Japan and seeing your yen, more than be cut in more than half over a decade, right?
And by the way, that's an even bigger problem in Japan because they are energy poor. Yep. And have to import energy, which is typically priced in US dollars. So, right. we've complained when the price of fuel has gone up here. Now imagine your currency being cut in half against the dollar. And, we'd effectively here, we'd be looking at like $8 to $10 per gallon gasoline.
Yes. And I live in Texas where it's $2.25 or something. So
yeah,
it's, people here would be really upset about that. So Japan,
there'd be riots and people would be voted out of office very quickly at prices like that.
Sure, yeah. So Japan is in a tough place. They don't have a lot of room, especially with a China that is having to be extraordinarily price competitive for exports. And so China will have, and I don't want to get too much into the tariff thing, we can come back to that at some point, but they have subsidized US tariffs in previous years. They continue to subsidize that. So they will continue to be price competitive on exports, which will force Japan to depreciate the yen. Maybe further, maybe they're in the zone. It's, within 5 or 10 points, they're kind of in the zone.
Yeah, that's going to be an interesting issue to see what the Japanese people think if the Bank of Japan further weakens the yen. Regarding Chinese stimulus, I'm liking it for selfish reasons. We have a huge position in Las Vegas Sands. So if they want to spray liquidity into the system there and have people go to Macau and hit the gaming tables, we're all for it. That works for us. So we'll make money from bad policy around here.
Sure. Yeah. I saw the announcement in China today. I've been in and around China for 20 years. I won't believe it until I see it. I mean, I think it's great for headlines. I don't trust it until I see money hit people's hands.
Fair enough. That's always a great point, Tony. Whenever it comes to central banks and government policy, we're skeptical too. So glad you were able to join us today. For people
Thank
who
you,
are
guys.
interested in your 1,800 different continuous forecasts, how do they find you?
We're at completeintel.com, and that's just a monthly recurring, no long-term commitments, $25 a month, and you get our forecast fresh every Monday morning. So thanks, Gary. Thanks for the opportunity.
All right, Tony. Great seeing you. Thanks for joining us, and we'll look forward to speaking with you sometime soon.
Thanks so much, Tony, for having you on and joining this week's 5 Things. Gary, going to move forward. This is the Bitcoin to $100,000 issue. That's our next point. Bitcoin crosses 100,000. We're talking Peter Schiff. You might have guessed. He finds a new excuse for why he was not wrong. Gary, thing number 2 this week. The written version will be thing number 1, but thing number 2 on the video version. Bitcoin breaks 100,000. And I think we got 4 or 5 exclamation marks there to really put an emphasis on it.
Yeah. So first of all, congratulations to the Bitcoin community. Look, Rob, just take a look at everything that's happened in the last few years. They got banned in China. There have been adverse regulatory decisions. The decision to allow Bitcoin ETFs and let people buy through regular brokerage firms, that took years with the SEC fighting it. There have been all kinds of regulatory threats. There have been all kinds of things that Bitcoin holders have had to endure. And it is a incredibly dedicated and resilient community. Deep Knowledge Investing, we have owned Bitcoin since it was at 15,000 approximately 4 years ago. So up 6.5x, 7x, depending on the day, is phenomenal. Bitcoin has crashed all the way down to 97,000 as of this. The funny thing is, the day after it crossed 100,000, one of the, it went back down to 91,000 right away. One of the interns texted me and said, "What's going on?" I said, "Nothing. Stay calm, stack sats." Right. And by the way, that is what the Bitcoin community has done. So let's go to our favorite Bitcoin hater, Peter Schiff. Schiff has been negative on Bitcoin at least since it was 1,000, making him wrong by 10,000%. Right? $1,000 invested in Bitcoin when Peter Schiff first started hating on it would net you $100,000. Had you put in 10,000 at that time, it'd be worth a cool $1 million. So, Peter is just consistently funny on this. And he doubled down on his horrible decision here, tweeting that it's ironic that Bitcoin only hit 100,000 by buying off politicians and getting in bed with the government, and that it was government intervention that caused this milestone to be hit. And his quotation here, "What couldn't be done in a free market was achieved through the coercive power of the state." Now, my view on all of this is you have to be kidding me. Bitcoin is an unregulated worldwide asset. It is traded everywhere in the world since its inception. So the idea that Bitcoin which is decentralized. There is no president of Bitcoin. If something goes wrong with Bitcoin, you can't call 1-800-Bitcoin and ask to talk to the manager, right? It is decentralized. The idea that Bitcoin got in bed with the US government is hilarious. There's no Bitcoin committee to get in bed with the US government. There is no Bitcoin representative. There's no board of Bitcoin directors to get into bed with the government. Peter's comment is ridiculous. Now, what just took me 2 minutes to explain, Lynn Alden blew apart with her usual hilarious, smart incisiveness. In one comment, she just pointed out that governments hold a far larger percentage of the world's refined gold than they do Bitcoin. And that, she's 100% right. Gold is largely held by central banks. Gold, which is Peter Schiff's big marketing push, it's his big position, it's the thing he talks about constantly. That's in bed with central banks all over the world. Not Bitcoin. Credit to Lynn Alden for just nailing that in like a 10-word tweet. I've often found that like I'll write 20 pages, 20-page white papers, and Lynn just puts out a 180 or 220-word tweet and just summarizes the whole thing. She's great at that. In the meantime, Bitcoin now has a $2 trillion market cap. It is the 12th largest currency globally. It outranks the Taiwanese dollar, closing in on the Australian dollar. And I believe, Alex, help me out on this, larger or smaller than silver right now?
It's larger than silver right now, I believe.
All
Yeah.
right. How long till it catches gold?
Well, interesting. I was going over, when I first got into Bitcoin, I read all the famous Bitcoin books, one of them being the Bitcoin Standard. And one of the kind of the most attractive things about Bitcoin is its hard money attributes, a bit like gold. And recently at the halving that I believe we had in March or April time, Bitcoin's stock to flow ratio actually has now overtaken gold's. So gold's, I believe, is around 58, Bitcoin's being around 63. And so following, looking at previous bull markets, we've seen that I don't think that this bull market's done. I still think we've got a few months left in it. So it'll be interesting to see how far it, or how close, or how much it surpasses gold in the coming year. So we'll see how wrong Peter Schiff is in the years
I
coming.
think we already know how wrong Peter Schiff is.
Yeah.
It's just a matter of whether he'll be man enough to admit it. But it's to give people a little clarity on the hardness numbers that Alex is talking about. Basically, what he's doing is saying that the supply of gold expands by about 1.5 or 2% a year. And after the most recent halving, Bitcoin, the supply is expanding even more slowly than that, and that will decrease over time. But in the meantime, the person who gave Bitcoin the biggest lift last week, it was not President Trump. It was not the Bitcoin board of directors that, Peter Schiff seems to think it exists. It wasn't Lynn Alden, who we respect and admire. It was accidentally Jerome Powell. Jerome Powell pointed out that Bitcoin is not a competitor for the dollar. We agree. The dollar is just printed into oblivion by adding trillions and trillions of dollars a year. But his quotation here about Bitcoin, it's just like gold, only it's virtual. It's not a competitor for the dollar. It's really a competitor for gold. And that is a phenomenal quotation by Chairman Powell. That alone sent Bitcoin up huge on the day that he said it. Imagine the chairman of the Federal Reserve saying that Bitcoin was a competitor for gold, especially given that it was within my lifetime that the dollar was delinked from gold, making the dollar worth a whole lot less. Alex, what do you see in the future? How long till we hit 200,000 or a million, or what happens, or does it just crash down to 50?
Well, no, I do think it is remarkable hearing a Fed chairman say that Bitcoin is a competitor to gold. I mean, we've seen people from the Federal Reserve like Neil Kashkari, who we wrote a piece about, I believe it was a couple months ago, maybe it was just around a month ago, and he was saying that there's still no real use case. So it's certainly funny that a lot of people, no matter their kind of position or their view on their world, the view on the world or their role in the world, they still are kind of coming around to it and don't fully understand it. But yeah, I think, as I said, this coming year, I think, as you say, I'm a Bitcoiner. So I think this next year is going to be very bullish for Bitcoin. And I think it's an opportunity for more people to learn about it. Maybe hopefully Peter Schiff finally. I'm doubtful. But yeah, I think especially now that we've seen obviously the US talk about a potential strategic Bitcoin reserve. We've seen, I think it's at two other countries now. I saw there was talks about Switzerland. We saw something about Russia recently. So yeah, Bitcoin's definitely going a bit more viral, I think.
Yeah, and so Rob, before we hand it back to you, Alex, on your point regarding Kashkari saying there's no use case,
Mm,
I'm not going to take the 20 minutes it would take to explain it now, but I will let people know that we are about to re-release or come out with a second edition of Deep Knowledge Investing's white paper, arguing against Nassim Taleb's assertion that Bitcoin is a zero. Part of Taleb's argument was to say it's not a currency. You can't use it to buy things. And I will tell you that 3 years ago in Deep Knowledge Investing's white paper on the topic, I argued you absolutely can use Bitcoin to buy things. That facility, that capacity has increased. And when we release the new revised edition of this white paper, which will be coming out soon, and Rob will be releasing it for us, I'm so proud to say, we will be including an entire section on the Lightning Network, on Nostr, explaining how robust the Bitcoin payment system is. And I'm really proud to announce that the person who wrote that section is here with us. Good job, Alex. We're looking
thank you.
forward to adding your work to the Deep Knowledge Investing white paper on this. It's phenomenal, and looking forward to directly including your work with what we're putting out there and explaining to people that there are use cases for Bitcoin, and people are entitled to not like it, but the Bitcoin community has, I think, at this point, some really great arguments to be made, and we'll be getting that out to you for the people listening to this. We're going to be making it available to everybody in the next few weeks.
Gary, one other question I wanted to touch on real quick before we transition to thing number three. President-elect Trump, he appointed Paul Atkins, pro-crypto, blockchain lobbyist. He's going to be replacing Gary Gensler at the SEC. What do you make of that with Gensler out at the SEC?
So look, it's a great move. Gary Gensler, first of all, it's tough to talk about. On one hand, look, Rob, we have been very critical of government overreach and government power on the show on a regular basis. I'll also tell you that in general, the SEC is one of those few government agencies that I actually respect. I have, despite the fact that they get criticized a lot, I have seen them do excellent work. I have seen them investigate people who in the market stole from others, prosecute them, make great cases, and force them to make restitution and make investors who have been cheated whole. I have seen them do it, and they do some really good work at the SEC. It is, like I said, it's one of the few government agencies I actually respect. Gary Gensler has been wearing the black hat in the Bitcoin community and the crypto community for the last few years because he made it very hard to get approval for the Bitcoin ETFs. He's been anti-crypto. And even when earlier this year, we got the approval for the dozen or so ETFs that are out there right now, Chairman Gensler made a point of saying we don't endorse this. Like he added commentary saying this is a bad idea, but we did it because we had to. They'd lost some court cases. I don't think Gary Gensler is an idiot. I don't think he's a villain, and I do respect the SEC. That said, President Trump has every right to put the people he wants in position. President Trump was supported in his reelection efforts strongly by the Bitcoin and crypto community. He sought out their votes. He sought out their support. And I think it's only natural and understandable for him to want to replace Chairman Gensler with somebody who shares the view of both President Trump and his supporters. This choice it's a really good choice for that purpose. And I like to see it. And I like the fact that President Trump is coming out and saying this is really important. And he's made it clear that he wants the US to be a leader in new technologies, including things like Bitcoin and artificial intelligence. And I like the idea that, he wants to ensure that the US doesn't fall behind on these important technologies and these important developments. In general, I'm in favor of the government getting out of the way, but putting in regulators who will take a lighter hand to these things fits right into our thesis for how these markets should work. I think it was a good choice by President-elect Trump. I don't think Gary Gensler is the villain everyone makes him out to be, but this development is very positive for the Bitcoin community. We support it. I'm glad to see it. And, I don't think anyone in the deep knowledge investing community has sold a single sat. So we're holding firm here.
That's exactly right. As always, you're listening to the 5 Things with Deep Knowledge Investing. Head to the website, deepknowledgeinvesting.com. You can grab a free subscription, be added to our subscriber and newsletter list. We'll deliver the 5 things to you on a weekly basis. And we'd also love if you considered a premium subscription on the website. That'll give you access to all premium paywalled content, as well as current recommendations and buy and sell instances that come from Gary as the portfolio adjusts. Moving on, thing number 3, we're talking game theory, prisoner's dilemma. Gary, thing number 3, Fed versus Congress as a prisoner's dilemma.
All right, Rob. So people talk a lot about this idea of game theory. And maybe the first example of game theory applied is called a prisoner's dilemma. So the way it works is, let's imagine 2 criminals get caught and they're brought in to be interrogated by the police, and they're put in separate rooms that can't communicate with each other. Now, the best option for those 2 prisoners is to not break. The police will threaten them and say, your buddy talked, he helped us, you're going to jail for a long time, you're going to jail forever. And the best outcome is if both criminals trust each other, they cooperate with each other, not with the police, and don't say anything. And that in this thought experiment results in the least amount of jail time for both of them. But what happens is, your worst scenario individually is if your buddy talks and you don't. And so everybody has an incentive to say, well, I don't want to be the one going to jail, for a really long time while my buddy goes free. And so what inevitably happens is both of those criminals have an incentive to not cooperate with each other. And that leads to the worst possible outcome for both, with the most amount of combined jail time. And so it's a situation where they would be better off trusting each other, but they both have an individual incentive to not trust each other. And it gets them the worst outcome and the police the best outcome. Now, we're not in favor of criminals. This is simply a thought experiment. And our view right now is that's what's going on. We've talked about for many months now the secret war between the Federal Reserve and Congress and the Treasury Department. And so what's happening is Congress is overspending by trillions of dollars a year, spraying stimulus into the economy. That creates inflation. And at the same time, Congress is screaming to the Federal Reserve, lower rates, because they want a faster, hotter economy. They want more GDP growth. And until September, Chairman Powell and the Federal Reserve held firm. They did not cooperate with Congress, right? It's like a prisoner's dilemma. Congress was saying, we're throwing stimulus in. Hey, Fed, why don't you throw stimulus in too? And the Fed held firm. They said, Congress, we're not going to cooperate with you. We need to have a restrictive monetary policy. Now, between the two of us, I don't think the Fed was nearly as restrictive as they say they were, but at least they held firm. Now, in September, the Federal Reserve cut rates, and promptly everything on the yield curve from 1 year out, everything from 1 year to 5 years, 10 years, 20, 30 years, everything between 1 and 30 years, the interest rates went up. The yields went up, right? And the reason is because Congress was still spraying stimulus into the economy, but now the Fed was starting to back off. And what that meant is that between the Fed adding stimulus through lower rates and having a lower cost of capital, and Congress continuing to spray stimulus into the economy, we had, again, like any prisoner's dilemma, the worst of all possible worlds, because lower rates and higher spending leads to what? It leads to gigantic inflation and the term that we've used so many times here before, a Potemkin economy. And that is a term for something that is all show with no substance. It relates to a Soviet village where they just built the house fronts and the storefronts, but there was nothing behind it. And that's where we are right now. More than 100% of US GDP growth is congressional overspending. The real productive private market economy is actually declining. And that is because the Fed is blinked. And right now, we are in the worst possible scenario where both criminals, right, are deciding, that they're not going to cooperate. Or sorry, yeah, well, that's where we are. So we've got lower rates, higher spending, massive inflation, and we expect that that's going to continue to pick up.
Your question, who is the Fed supposed to be accountable to, right? Like, where do, you talk about Congress wanting this from the Fed and the Fed going back and vice versa. But at the end of the day, I mean, we obviously know how we feel about the Fed and the Fed, hashtag and the Fed, right? But
Yeah.
who does the Fed answer to? It seems like it answers to itself as its own governing body.
Yeah, well, it pretty much does. So the key thing, pardon me, is that the Fed is a quasi-governmental agency. Technically, they are not part of the government, but they are subject to governmental oversight. And, Federal Reserve chairmen have to be confirmed by Congress or rather the Senate. So they're sort of a political agency, but technically not supposed to be. They're supposed to be independent. But the truth is the Fed is really owned by the member banks, right? Like, JP Morgan, Bank of America, and, other large firms like that. So that's really who they answer to. Now, the Federal Reserve really officially has one mandate, and that is stable prices. Here's the quiz. Stable prices means an inflation rate of what? Somebody answer me. Anybody?
2%.
No, wrong. Zero. Stable prices is 0% inflation. The Federal Reserve has since changed its mandate. They have redefined stable prices to mean 2% inflation, which, by the way, will rob you of more than half of the value of your savings over a 40-year working life. It's not trivial, right? It's not like, your dollar candy bar goes to $1.02 and it's a disaster. It compounds over time. The other thing they've done is they've added an employment aspect to it. And they're saying, well, we also have a dual mandate. And the second part of that mandate is full employment. That's not true. They made it up. The Fed should not concern itself with anything other than stable prices, which, by the way, the market can handle as well. And we've had much more inflation since the establishment of the Federal Reserve in 1913 than we had in the years preceding the establishment of the Fed. So people say, well, we need the Fed. If we didn't have the Fed, we don't need the Fed. Throughout most of American history, they're the first, roughly 150 years of American history, we did not have a Federal Reserve and didn't need one. So that's, it's completely unnecessary. But effectively, the Fed answers to its mandate, which it changes, but it's really owned by the member banks, which is the large money center banks.
Alex, anything you'd want to add to thing number 3?
I actually had a question for Gary, which was so I was at the Bitcoin conference and I saw Trump speak, and he obviously mentioned firing Gary Gensler, which got the crowd going. And he'd also recently said, close to the time, that he'd planned to get rid of Jerome Powell. Now, and I think somewhat recently, he said he actually wanted some authority over the Federal Reserve. Now, he's kind of backtracked a little bit, and he has said that he has now no plans to remove Jerome Powell from Fed chairman until his term's done in 2026, I believe it is. Do you think that is a signal that he believes Powell is, acting in the best interest of the people, or do you think how do you read that?
No, I don't think he believes that for a minute, but I think President Trump is taking a practical tack here. He doesn't have an effective method to remove Chairman Powell. I think talking about it played well in certain circles. It was a good thing to say running for office. His supporters liked that idea. And Chairman Powell came out and said, I won't go. And he was asked in one of those press conferences. The press asked him, if President Trump tries to fire you or asks you to resign, will you step down? And he just said no. And that was it. Like, it was just one word, definitive response. I'm not going anywhere. And he also made it crystal clear through public statements that in the event that President Trump tried to force him out, that he would defend himself using the legal process. Now, I don't actually know Chairman Powell's net worth, but I've seen estimates that it exceeds $100 million. He can fight, with the US government and hire the attorneys he needs. I think somebody probably informed President Trump, you don't really have a good path to replacing Chairman Powell. On top of that, I don't want the government to have more control over the Fed, and I don't want the Fed to have more control over the economy. I'd actually like the Fed to disappear and the government to not talk about setting interest rates again for the rest of my life. I think best case scenario here is if President Trump leaves Chairman Powell alone for the next 2 years, and when he has the opportunity to replace him in 2026, Deep Knowledge Investing's pick for that is Judy Shelton. We would love to see a pro-gold hard money advocate in that seat. Assuming that somebody's going to sit in that seat, we might as well have somebody in there who understands the value of not debasing the currency.
Awesome. Wrapping up thing number 3 and moving on to thing number 4, Gary. We've talked about this in the past couple months and episodes. We have it here again. Retail earnings revised down for a couple companies we'll talk about here in a minute, further leading us to the sentiment that the consumer just is not doing well. Thing number 4, Gary, the consumer keeps struggling.
Yeah, so Rob, this is somehow the third week in a row we have been telling this story where, throughout earnings season, we have seen, pardon me, we've seen pairs of retail companies reporting earnings. And we saw higher priced Target have a bad quarter and lower guidance. Lower priced Walmart did really well. We saw a week ago luxury, the providers of luxury goods not doing well, taking down estimates. Luxury buyers are now looking for used product, discounted product. But again, lower priced companies like Costco and Walmart doing really well. Well, last week, what we got were diverging reports between American Eagle and Foot Locker, two mall-based full-price retailers that had bad earnings reports. Their revenue growth was somewhere between 0 and negative. They lowered estimates. They lowered estimates for their gross margins, saying they didn't have pricing power. And on the other side of that, discounter, Dollar Tree, beat earnings estimates and tightened its sales growth range. Instead of going through all the numbers, I'll just tell you that they're projecting 5% revenue growth, which far exceeds what we're seeing at full price mall retailers. So Rob, again, the story here is that the full price retailers are lowering sales and margin estimates, lowering earnings estimates, suffering a bit. The consumer's backing away from those purchases. The discounters, they're having good quarters. They're raising guidance, tightening guidance ranges, beating earnings estimates. There is definitely a shift in the consumer toward the discounters and away from discretionary purchases toward the necessities.
Yeah, and Gary, I know we see with inflation, right, the wealthy, those with discretionary income, right, impacts them the least. And in certain instances, a lot of times can be beneficial for those on that end of the wealth curve. Same thing that we're seeing here is that inflation is just the constant theme, right? Inflation is what's driving all of this and is the root cause of what we're seeing consistently with these weakening and soft retail markets.
Rob, you've got it exactly right. You understand this perfectly. Honestly, if we can't have Judy Shelton at the Fed, I'm sending you in. Wait, I don't have that power. All right. Sorry, I would. But
I'll have one mandate.
Yeah, exactly. Right. Just give me power for a day.
Close the doors.
Yeah, right. Close the doors, put a lock on it, and call me like
burn it down.
Mission accomplished. Right. No, don't burn anything. We're not. It was an expression. It was just an expression. Nobody's burning anything. We're not for violence here or arson. It was just an expression. Anyway, The key thing, Rob, and I've talked about this a lot. One of the things that makes me angry, and I know we're not supposed to use those words, we're not supposed to say we're angry, we're upset. I am, is that so many of the policies out of Washington where they claim they are to harm the wealthy and lift up the poor and help the poor have the opposite effect. And this is a perfect example of this. So, the reason we started to get so much inflation was because the Fed threw trillions of dollars of stimmies at us. And people are like, oh my God, this is great. Free money. Well, guess what happens? If you're wealthy, you already owned your own home. You have a credit rating that starts with an 8, and you could have gotten, all the way through the end of 2021, a mortgage right around 3% pre-tax. That works really well. And so the dollar value of your home goes up, of this hard assets goes up, but the purchasing power of the money you owe on your mortgage goes down. Like I've talked about this a million times, but my monthly mortgage payment is locked in for 30 years. So I write a check every month now, but now imagine what the value of that check will be in 15 years, 20 years, 25 years, right? Much, much lower. The wealthy can do things like buy automobiles and watches and Bitcoin and gold and other hard, not easily replicated assets that go up in value. And the ones who are really smart use leverage to do it. They own stocks, which have done really well. They can use leverage to do that. And the advantage of that is you own assets that go up in value as the dollar depreciates. They go up in dollar value. But the money that you owe becomes worth less. So the wealthy do fine. And again, one of the things that I spend so much time doing is helping deep knowledge investing premium subscribers make money from things like this. All the things that cause everybody to be miserable, we find ways to make money from it, right? And by the way, you do not need to be wealthy. You just need to know what to do. We help people, sometimes people who have, just a few tens of thousands of dollars in a Schwab account or an E-Trade account. But now, Rob, let's talk about what those stimmies did to poor people. A lot of those checks that got sent out were for $1,600. And you can say, oh, Gary, you're terrible. How could you not want poor people to have $1,600? That's not the issue. So they got that check and it was really nice. And they paid off debt smart, right? And they spent a little bit on, a little bit on luxuries, but people pretty much got their balance sheets in order. They got rid of debt. The American people generally handled their stimmy checks really well. And that's great. Credit to them. I'm happy about that. The problem is with inflation, the costs, the monthly expenses for an average family might have gone up by $100, $200, $300. So at $200 a month, that's $2,400 a year. So you got a $1,600 stimmy check, but every year your monthly your annual expenses are up $2,400. You tell me who's winning. And so Washington said, we're going to do this. We're going to hurt the rich people and poor people. We're helping you. We care about you. But somehow the opposite keeps happening. And this is why you can't trust the politicians with this stuff. That they created this inflation and, they either knew what would happen or they should know what would happen, but they're accountable for this. Nobody's holding them to account. Although in fairness, the last election did have a lot of turnover in Congress and in the White House. And a big part of that, I think, was people upset about inflation. Now, are all of them viewers of the five things? Do they understand the economy the way our viewers here do? Of course not. This show isn't that big, right? But, even without us explaining it, people got a sense that something was wrong and they needed to make a change. And so, part of Washington did get held accountable.
Yeah, I'm no math major, but looks like the example you laid out leaves a lot of people underwater, and I think that's what we saw in the latest election. People feeling it where it hurts most in their pocketbooks.
Exactly.
This is the Bitcoin to 100,000 issue. Again, please head to deepknowledgeinvesting.com. Sign up for a free subscription. Consider a premium subscription as well. Tons of value will be unlocked with a premium subscription, as well as early receipts of the five things and other premium subscriber gated material. Gary, our fifth and final thing of this week's episode, again, going to investor education. We're talking about international investing this time. Gary, you make it clear you're not against it, but we also think that those investing internationally need to understand exposure. So, Gary, I'm going to turn thing number 5 into a question. What are some factors to consider when investing internationally?
Well, Rob, let's go through these things one at a time. And you're right. I'm not against international investing. I'm not against investing outside the United States. But people should be aware of the risks that they're taking. One of the key ones is when I invest here in the US, chances are I know the companies pretty well, right? Like you see them in the mall or you use their products or you see their advertising. You have a sense of what's going on at that company. But, if I were to mention 3 or 4 big companies in Vietnam or in the Philippines, would you know them? No, most of us wouldn't. You need to understand a market and what's happening. And so just a good place to start, Rob, is do you know the company? Do you know the market? Do you know the economy and the workers and the factors that go into the labor laws, the factors that go into these companies being profitable in their home markets?
Gary, one of the ways to get money into international investments is through what we call American Depository Receipts, ADR. Tell us what that is and how do ADRs work?
So the reason an ADR can be useful is, let's say, we wanted to buy a company like the example we've got in the written version of the 5 things is Taiwan Semiconductor. They are without question the best foundry company on the planet. They're the best chip maker in the world. But they're in Taiwan. So, if you wanted to buy that, chances are you don't have access to it in like your Schwab account or your E-Trade account. Now, if you're a big hedge fund and you've got, a couple of prime brokers, yeah, you can probably go into the Taiwanese market, do a currency swap, something like that, but it's complicated and not so accessible. With an ADR, a domestic financial institution, they buy the shares of the foreign stock, they convert the shares currency into US dollars, they hold them as inventory, and then it trades like a typical stock on the US exchange. So in the case of Taiwan Semiconductor, the ticker is TSM. If you buy TSM, you're not actually buying the shares of Taiwan Semiconductor in Taiwan. You're making a deal with a local-ish bank, an American bank, to buy exposure to Taiwan Semiconductor stock. It's not exactly the same thing, but it makes the mechanics of making those purchases easier.
Gary, talking about risks now and just understanding what you're getting yourself into, what would you say are some of the most common risks that are associated with international investing?
Well, let's talk about 2 of them, Rob. A big one is currency risk. And this is something, Tony Nash was talking about earlier. He talked about the Japanese yen going from 70 something against the dollar to, earlier this year was, I think, 162 to the dollar. Right now it's in the 150s. So ballpark, the Japanese yen lost more than 50% of its value against the dollar over the last decade or so. And, we did a chart here at Deep Knowledge Investing, where people got all excited because, the Nikkei was up. That's that's like the Japanese version of the S&P 500 or the Dow Jones. And, it was up and hit a new high at 40,000. And, we did a chart adjusting for the dollar, and basically in dollar terms, it had gone nowhere.
Right.
So you could have gotten the stock right, but then you needed to hold yen, and then you needed to hedge yen. And if you didn't do that, and that is beyond most retail investors, most amateur investors, if you didn't do that, you could have had a stock pick, where your stock went up an enormous amount. The Nikkei went up an enormous amount, but it was in yen. And if you're converting to dollars, doesn't work out so well. The other thing is you really need to be aware of fraud and the regulatory environment. Now, people will correctly point out that, hey, we've had fraud here in the US. We've had companies like Enron, and, we've seen cases this year, where companies have been late filing, and there have been issues related to the quality of their earnings and restatements. This happens. In general, the SEC does a pretty good job of policing this stuff. Are they 100% effective? No, of course not. But they've done a pretty good job with that. But in other countries, those regulations are often less stringent. The best example I can give you is that China actually prevents its companies from complying with US audit regulations. So if you're a domestic company in China, if you are a China-based Chinese company, and you say, hey, we want to have ADRs, we want to have our stock trade on the US exchanges, and they require us to have an audit by a reputable firm, the Chinese government actually says, no, you can't do that. And so, would you, Rob, let me ask you this. Would you invest in a company if you knew that they were prohibited from having a credible audit, that you just had to believe their numbers because everybody tells the truth all the time? Would you do that?
More than likely not. Heck no.
Right. Exactly. So again, it doesn't mean international investing is bad. It means you're taking on different risks that you're not aware of. And a lot of times people don't even think about currency risk, and they're not in a position to set up currency swaps. And it's not that these things can't be done. And I encourage people who are interested in it, go read, learn, figure it out. It is a solvable problem, but it's not the kind of thing that you're not going to get that on a Reddit message board, and it's not something that comes up in discussions of meme stocks.
Gary, on the flip side of the coin, real quickly before we close out the episode, what are some benefits though? Obviously, we highlighted just some risk in terms of currency risk, fraud, even higher costs that are associated, right, with fees or taxes. What are at least some benefits to potential international investing?
Well, first of all, you have access to a wider variety of companies. Every great company on the planet is not necessarily an American company. There are fantastic companies in other parts of the world. You can get exposure to parts of the world that are growing. There's been a lot of talk about economic malaise. Europe is pretty much in free fall. Tony Nash was talking earlier in the show about issues in Europe. France their economy is not in good shape. Germany is their manufacturing industry. German manufacturing used to be the country's strength, in particular their automotive industry. That's all in free fall right now. They have bad energy policies. But there are Asian companies where the opposite is happening, where those are economies that are growing really quickly. There are some really good companies in some of those places. Potentially, you can get higher growth in some of those places. There are a lot of really good Indian companies, and that market, that economy is starting to industrialize and growing really quickly. So there are lots of good reasons why you might like those companies or those different exposures, or just those returns. Again, the US has most of the mega cap companies in the world, but it doesn't mean that there aren't some excellent companies out of the US. And with the US market trading at record levels, there's nothing wrong with looking for bargains in other markets.
That concludes this week's episode of The Five Things. Again, a milestone issue, the Bitcoin to 100,000 issue. I want to thank our guest, Tony Nash. Just to highlight Tony one more time, you can follow him on X at Tony Nash Nerd. That's it. That's his handle.
That's his
Not
choice.
mine. So yeah, but I love it. Or you can check out his company, Complete Intelligence, at completeintel.com. Really thank Tony for being a part of the show. And as always, Alex, thank you for contributing, being a key member of the team, and everything you do for the Five Things. Gary, I'll turn it over to you for final thoughts.
Well, first of all, Rob, I always like to take this time to thank our viewers. The channel's continued to grow, and we've gotten some really good questions from them over the last few weeks. As always, we know your time is valuable, and thank you for spending it with us. We appreciate it. Most importantly, congratulations to the Bitcoin community. It is just an incredible community of smart, dedicated people who have endured ridicule and adverse regulatory situations, and a lot of them have just made an enormous amount of money by just having diamond hands. Congratulations to that entire community. Thrilled to be part of that ride and part of that community, and to have done great content with the team at OnRamp Bitcoin. I love being on their show. They're terrific. And then finally, somebody please just check on Peter Schiff. I own gold. I like Peter's work on gold. I just, I hope he's okay. Somebody check on him and make sure, because I want to keep reading his work on gold.
Thanks, everyone.